Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Well, here it is, the last couple of weeks before the end of the year as we get ready to move into the traditional Santa Claus rally. A couple of things out, of course, over the weekend. Vaccines now getting delivered. This is certainly optimistic news for the markets and the economy. We're going to get everybody vaccinated and we can all go back to being normal, not wearing masks and going back to work. We'll see if that actually works out to be the case. But from a market perspective, that's certainly positive news. Markets are going to open up a little bit this morning. Now, interestingly enough, we are currently on a money flow sell signal, something that we've been kind of really talking about here over the last couple of weeks. And really, this money flow sell signal here has been, kind of playing out true to form. Saw some weakness in prices last week. But even though we're on a sell signal, money flows have remained positive at this point, which has been giving a little bit of lift to the underlying stock. So even though we were going through distribution season and we did actually have a money flow sell signal in place, the underlying flow of money funds has actually been very strong. People are trying to pile into the markets to get into the markets for the end of the year. So we've continued to see some relative strength in the underlying money flow itself. So the underlying money flow has been positive, even though we've got a sell signal in place. We also have a MACD sell signal in place as well at this point, which also has kind of corresponded with this weakness in the markets. Now, this doesn't mean that, of course, that we're going to continue to have weakness. In fact, we could very much see a repeat of what we saw earlier this month, which was when we actually had this money flow sell signal here back in late November, and the markets kind of went down a little bit, tested support, and then we took off in this advance heading into the first couple of weeks of December. This could be the same exact kind of setup that we get right here, particularly as we move into the end of the year, the traditional kind of Santa Claus rally. And the reason for that is simply twofold. Pension funds, mutual funds, etc., all want to be positioned in the markets as they end out this year. So when they publish out their year-end quarterly reports, this is called window dressing, that they have all the right stocks in their portfolio. So they've got to have the Tesla, the Zoom, whatever. They'll buy all those here over the course of the next couple of weeks, make sure they're on their books as they report their year-end holdings. And then in January, potentially we could see a pickup in selling, particularly because of the level of exuberance that we have in the markets currently. So again, this is a good setup here. The markets came down here last week. We tested this previous breakout to all-time highs, and we're sitting right here on the 20-day moving average at this point. So that does give the market some near-term support. And what we need to see here, of course, is this money flow indicator turn back up into positive. And that if we get that this week, that will suggest that we'll get kind of this year-end push over the next couple of weeks. Again, with markets very extended and very elevated long-term, something we pointed out in this weekend's newsletter. So if you go to realinvestmentadvice.com, click on our newsletter link, we've got some charts in there showing the markets in terms of their long-term standard deviations, long-term extensions of moving averages, which are rather extreme and some of the highest levels in history. So even though we get this advance into the end of the year, 2021 may be a little bit different story, particularly if we don't see earnings grow at the rate that is currently expected to happen, if economic growth doesn't pick up to the rate that people expect because of the vaccine, or potentially that we don't get the vaccine out fast enough, or if the vaccine doesn't actually have the effect that we expect because the actual virus mutates at some point. There's a lot of risk moving into 2021, particularly when you have such a high level of elevated valuations and prices in the markets currently. Just something to think about as we head into next year. But for now, look for the end of the year, the Santa Claus rally. Santa to visit Wall Street is always kind of an optimistic time. And we'll see you next time on the next edition of 3 Minutes on Markets and Money. I'm your host, Lance Roberts.